This is the Resilient Advisor Show with Jay Coulter.
Thanks for downloading this monthly update of the Blockchain Report with my friend Dan Weiskopf, portfolio manager at Toroso Investments. Dan, it has been an interesting month in the crypto space. Before we even get into my questions, what are your high-level thoughts on what advisors need to think about the crypto markets today?
High level, they've got to think not just about tomorrow, not just about the price action of Bitcoin, but think about the disruption, the change, where we're headed over the next years, or at least 6 months.
I mean, that's the advice traditional asset managers give financial advisors during periods of duress, and it's sound. There's a reason that they normally give that type of advice. But in your thoughts in working with advisors, this asset class has always been very volatile. How should they look at this volatility today as we sit here in May of 2022?
Yeah, we're supposed to be buying low, selling high. At this point in time, it's very difficult to do. And I smile when I say that because it's difficult for me to do, to be perfectly honest with you about it. But, the business models haven't changed. The price action has changed. And what we're seeing in talking to companies and management teams is, they're worried, some of them, about their access to capital. That is true. But they can pull back a bit on some of their growth goals and still maintain strong balance sheets. I think that is really an important dynamic on a go-forward basis.
All right, let's dig in. Over the last month, you guys have sold your position in Twitter. What's the thesis there?
Yeah, the thesis was really pretty clear. We're not an arbitrage fund. We saw a good price for Twitter based on what Elon Musk was saying he would pay for the whole company. And, for those who are fans of Elon, that's great. We are as well. But he's very unpredictable. So the decision was made right before it was announced, fortunately, to take our profit and run. And so we were fortunate to get out at a very strong price.
And your note notes that you took the proceeds from that sale and you reallocated among Marathon, Riot, Coinbase, and Roblox. What is the thought process there?
Going back to what I said before, the prices are down. We're trying to be true to our mandate, which is to capitalize on those companies that we feel strongest about according to our process, and increase our weighting into the price decline. We saw the opportunity. We continue to focus on those companies, and we added to them. And I think we also added to Hive blockchain as well, which is another minor.
All right. So Dan, Coinbase has been in the news a lot the last 30 days. Last week, I was at the Morningstar Investment Conference, and I had a chance to speak with Maddie Hume, a senior analyst there. And while she maybe was not as bullish on the space as you are, she did not have the same concerns around Coinbase and the potential challenges investors may have if they're holding their crypto assets on their platform in the event of a bankruptcy. What are your comments on that potential risk?
Yeah, I mean, they didn't do a good job communicating that at all in the public markets. They've got billions of dollars on their balance sheet. There was no reason for Armstrong to come out the way he did and speak about bankruptcy. It was just a matter of disclosure. Having said all that, I think the company is fine. It's definitely a leader in the space, and it's a core holding for us, as you would expect.
All right. So in your note, and anybody, you can download the monthly blockchain update by going to bloketf.com. That's bloketf.com. In your most recent note, you guys pointed out that you let your exposure to the crypto mining space shrink from 28 to 20%. And that's not insignificant. What's the thought process there?
Well, the thought process is we're not stubborn portfolio managers, right? We let it drift down on purpose, seeing that the price action of Bitcoin would hurt the miners, while also still maintaining what we would say a significant exposure. That's where we get a lot of correlation to the price action. And we knew that from the experience of talking to the companies and managing our exposure to the stocks.
Okay. So you also note that you're in a period now where relationships matter in this space. It's something that you and your team have always paid attention to, but it seems to be particularly important now. What are your thoughts?
Yeah, I'm spending a lot of time talking to the managements for trying to learn exactly what's happening, right, for purposes of that, and visiting 2 of the miners in June to see exactly, what's being built, right? We think that, the relationships and crossing the eyes and understanding how the ecosystem is being built is on a long-term basis super important. So just talking to all the CEOs and understanding what's going on is what we do.
So Dan, your popular blockchain interview series has been going on for almost a year now. Who are some of the more recent guest advisors should hear about?
Well, we have to have a little bit of fun in the blockchain CEO series, and Landon Cassill, who's a race car driver, offers a fun perspective, but also a real perspective around the metaverse, as well as crypto. This is a race car driver for NASCAR that is paid in crypto. And he's been doing this for a couple of years now and built a nest egg that's very significant and knows what he's talking about.
What did you learn in that interview?
I learned that in the metaverse, he competes against other drivers and while he's training. And that's an interesting perspective if you think about it. Plus, there's a lot of analogies between building a miner and a facility and race car driving.
Excellent. To learn more about the blockchain interview series, please visit theblockchaininterviews.com. That's theblockchaininterviews.com. And to download this month's blockchain update, visit bloketf.com, bloketf.com. Dan, thanks for coming back on.
Thanks, Jay. Be well. Safe travels.